Markets open the week with mixed results, though the S&P 500 continues climbing to new all-time highs. Current market conditions show a fascinating dynamic. While some investors previously questioned U.S. market valuations and sought opportunities in Europe, the continued strength of American markets is causing a reconsideration. The S&P's persistent march to new highs, despite concerns about overvaluation, demonstrates the market's current momentum. With investor sentiment clearly in greed territory, this environment may not offer the best opportunities for traditional undervalued plays, but growth stocks with strong fundamentals could still deliver exceptional returns. Grab Holdings represents a quiet revolution happening in Southeast Asia. No longer just a ride-hailing app, Grab has evolved into an all-in-one super app serving over 180 million users across food delivery, payments, and fintech. The company recently posted record revenue and turned free cash flow positive for the first time, while continuing to tighten losses quarter after quarter. Howard Marks, the legendary investor and co-founder of Oaktree Capital, recently added over 10 million shares to his portfolio, a significant signal of confidence. In a region experiencing booming mobile growth and rising digital spending, Grab could potentially become the next major global platform. Key metrics show strong institutional support, with 56% ownership, nearly twice as much buying as selling over the past year, and a massive $5 billion institutional purchase in the fourth quarter. Citibank maintains a buy rating with a $6.20 price target, representing substantial upside from current levels. The company shows A+ growth ratings with 18 to 19% revenue growth and impressive 73% free cash flow growth over the last 12 months. Oscar Health stands out as an AI-native health insurance disruptor in the $1.5 trillion healthcare industry. While legacy insurers remain stuck in outdated systems, Oscar has built a tech-first platform from the ground up, covering everything from claims processing to patient care delivery. Recent first-quarter results exceeded expectations across all metrics: strong revenues, narrowing losses, and raised guidance. The company demonstrates clear margin improvement and a visible path to profitability. Institutional ownership sits at 76%, with nearly 3 times more buying than selling over the past year. The company trades with strong growth metrics, showing 54% year-over-year revenue growth and 24% forward-looking growth projections. Most impressively, Oscar has transformed from a 20% negative margin company historically to positive 1% margins currently, demonstrating operational leverage and efficiency improvements. DLocal dominates emerging market payments, powering transactions for global giants like Amazon, DLocal, Spotify, and Netflix across Latin America, Africa, and Asia. Rather than serving as a simple payment processor, DLocal owns the infrastructure, offering a single API that gives global businesses access to over 40 countries with local payment methods, faster settlements, and higher approval rates. The company posted double-digit revenue growth with solid margins and strong free cash flow in the first quarter. With 90% institutional ownership and more buying than selling overall, DLocal shows consistent quarterly institutional interest. JP Morgan recently cut their price target, but maintains an outperform rating at $16. DLocal demonstrates strong fundamentals, with forward revenue growth projections of about 23% and historically a really impressive return on invested capital above 20%. The company also maintains a zero net debt position, which, indicates excellent balance sheet strength. While the major cloud giants tend to dominate the headlines, Nebius is quietly building essential infrastructure for AI-powered businesses. The company specializes in cloud-native software that enables faster and more efficient deployment of AI workloads. Critically, Nebius has partnered with NVIDIA, which allows them to offer cutting-edge AI acceleration services. And just recently, their expansion into the UK market positions Nebius to capture opportunities in one of Europe's largest tech hubs. With AI demand exploding globally, Nebius really sits at the infrastructure core of this whole transformation. The stock has surged 187% over the past 12 months and has nearly doubled year-to-date at 97%. Institutional ownership stands at 22%, with no selling and $923 million in purchases over the past year, mainly concentrated in recent quarters. Wall Street assigns a strong buy rating of 4.75 out of 5. Duolingo stands as the world's most popular language learning application, serving over 60 million monthly active users and, growing rapidly. The company has really mastered gamification and AI-driven personalized lessons, while also expanding beyond just language into literacy and math education. Recent quarters show strong revenue growth, improved monetization, and a growing subscription base, all while heavily investing in AI to enhance learning effectiveness. With global expansion into new markets and education's digital transformation, Duolingo represents more than just an app. It's a platform transforming how millions learn worldwide. Institutional ownership now reaches 92%, with $3 billion in purchases versus $2.2 billion in sales over the past year. JP Morgan recently increased their price target to $580, citing continued strong growth. The stock has gained 113% over the past year, with 28% year-to-date returns. Growth metrics earn A+ ratings across the board, with 39% year-over-year revenue growth and 34% forward projections. The company has transformed from -7% historical margins to positive 12% currently, really demonstrating successful monetization strategies. While traditional cloud giants capture attention, Iridium is out there building Europe's next-generation data centers, powered entirely by renewable energy and optimized for AI and high-performance computing. The company is rapidly expanding its capacity, targeting 910 megawatts by the end of the year, with flagship projects like the Horizon 1 AI data center launching soon. Iridium's facilities support power-dense workloads, including NVIDIA's latest chips, making them ideal for crypto mining, AI training, and cloud services. In a world demanding sustainable, scalable infrastructure, Iridium positions itself as a critical player in the booming AI and crypto data center markets. Institutional ownership stands at 41%, with $301 million in purchases versus $57 million in sales over the past year. Wall Street assigns a strong buy rating, with the stock up 17% over the past year and 54% year-to-date. While these growth stocks show compelling fundamentals and strong institutional support, investors should consider position sizing and risk management. Growth stocks can experience significant volatility, and current market conditions with high investor sentiment suggest careful analysis of entry points. Each company demonstrates different risk-reward profiles. Established platforms like Duolingo and Grab offer more stability, while infrastructure plays like Nebius and Iridium provide higher growth potential with increased volatility. These 6 growth stocks represent diverse opportunities across different sectors and geographies, each positioned to benefit from long-term secular trends, including digital transformation, AI adoption, and emerging market growth. Successful growth investing requires patience, diversification, and conviction in long-term thesis execution.